let's continue with the second part of value investing. So first of all, you need to understand what is a stock, right? So a stock is actually an actual business with underlying value independent of its share price. So every stock, okay, if you're a value investor, you actually have your own valuation of the stock. Okay, and that valuation, that price is the price that you're willing to pay. Okay, the price at which you think this stock is worth that much. Okay, it is independent of what market dictates. Okay, it is independent of what the market perceive. Okay, so this is a very crucial point. Okay, if you are a value investor, you are not going to follow the momentum of the market. You are not going to be dictated by the market's valuation. You have your own set of valuation. Okay, the intrinsic value. So I think this is pretty straightforward. Value investors, they always want to buy undervalued quality stock and eventually sell it at the price deemed to be reasonable. That means when the stock has appreciated in terms of value up to the value at which you think it is worth, then you will sell it, right? So of course, going by this logic, the higher price that you pay for the stock, then the lower would be your return, right? Remember the term that I mentioned, margin of safety. Okay, so that is what this point actually means. Here you go. So you have to consider margin of safety. Okay, just in case if the investment went wrong, at least you have a safety net. At least you have a buffer. Okay, so as I mentioned to you, value investor, they will hunt for cheap but quality stocks, right? Actually, it should be quality stocks which are cheap, right? Quality comes first, cheapness second. And value investor, they buy stocks which basically once you bought a stock, you can sleep soundly at night. Okay, not the type of stock which is highly speculative and you wouldn't know what will happen overnight. Okay, so value investor, they will avoid such trade. Okay, they will just buy quality stocks, which to traders they may feel a bit, they may find it a bit boring because the volatility would not be exciting. Okay, so 3 elements of investing. You can see that again, research before buying. Okay, if you refer back to the first video, I did talk about this. All right, so research before you buy. Protect yourself from serious losses, okay, by setting a safety margin, right, and by picking the right stock and by entering at the low price, the price that you deem it is low enough, okay, considering the safety margin. And the value investor, they are very realistic. Okay, they know that they would not get like 100%, 200% return overnight, even over a year. Okay, but their goal is to set a very realistic goal. Okay, so every year maybe they would expect a growth in 20% or 30% in their portfolio. Right, so they will use benchmarks such as the FBMKLCI, or they use Dow Jones. They use the index, right, as their benchmark. Okay, so this is another key element of value investing. Now I've talked about the importance of safety margin, right? So this table basically will highlight to you, okay, why is safety margin so important, right? Now, imagine you have 10K in your hand, 10,000 ringgit, okay? If you lose 10%, you're left with 9,000 ringgit. You lose another 10%, 8,000. Lose another 8%, 10%, 7,000. And eventually, if you lose all the way up to 90% of your costs, then you will only left with 1,000 ringgit. Okay. On the other hand, okay, if you want to regain or recoup what you have invested earlier, this 10,000 ringgit from 1,000 ringgit, you can see how much effort it needs to take. Okay, in terms of percentage, it needs to go up to 900%. Only then you can regain what you have invested. So that is exactly why value investors, right, they want to protect their account at all costs. So that is why they are very stringent, they are very, very picky when it comes to picking the right stock and entering at the right price, considering the safety margin, because they wouldn't want this to happen. All right, so this is another key concept that I want to share with you. Now, next question, how can we analyze stocks, right? What are the steps that the value investor should take? Generally, when you look at a stock, you want to look at the general long-term prospects, right? So what would be, would there be any catalyst for earnings growth moving forward for the next 10 quarters or 3 years, right? So the value investors, you have to understand that they look for long-term investment, mid to long term. Okay, so that is why the future prospect or the immediate future prospect is really, really crucial. All right. They also look at the management, right? Recap from the first video, management is very important because management is the one that will make decisions, business decisions, which will dictate whether the company is going to make money or lose less money, right? So look for companies with good long-term prospect and good management, where they will be focused on quietly running their own business and not keep on appearing in the newspaper or in the media, okay, in the social media, saying that they are going to do this, they are going to do that, but ends up nothing has been done. So that is actually not a good management. Financial strength. Okay, for this, you can actually look back at the past 10 years or the past 5 years, the historical earnings, whether is there any revenue growth in the company over the past 5 years, right, over the past quarters. So is there any growth in earnings? What about the cash? Are they a cash-rich company or a cash-deficient company? Okay, are they heavily in debt, or are they debt-free? What about their assets? How does it stand against their liabilities? So all of these, you really, really need to do a thorough research. Okay, read their financial report, their annual report, their quarter report. Okay, because you only have the historical data to tell you. One more indicator would be, has the stock been dishing out dividends over at least 10 years? If it has been, then it shows that the company, the stock, actually values its investors, its shareholders, and they want to reward them. So a company which can afford to give dividend and choose to do so, right? This is another positive indicator of a company which you can consider to invest long term, right? I think that is all. Thank you and see you in our next video.